So I am entering buy cells over here.
Order filled.
Oh shit.
Stop filled.
So yep. I took those impulse cells because the cells looked the cells were looking good. The cells were looking good. So I will just see that is where my stop loss is, and this is where my trade profit could have been. But obviously I could have taken, so this is the first. So I will explain why I took those cells. One is because if I had to. So we are pretty bullish. We are pretty bullish. So I think I have broken a rule here. But the reason I was looking for sales is I was looking for some kind of retracement for price to come to retrace a bit lower before we go up. Why? Because we are in this 4-hour fair value gap. So today I was looking for buys. My bias was buys. Coming into the market, my bias was buys. But market opened and price came and it is retesting this 4-hour fair value gap. We are at the midpoint of that fair value gap, and at the midpoint of that fair value gap we have something like a low time frame. We have something like a low time frame buy side liquidity. Now price swept it and it formulated swept it and we inversed this gap over here, closing below the 4-hour fair value gap, and we made a fair value 1 minute fair value gap that I used for my entry. Another reason I took it is because on the ES, so ES is just catching up right now. ES was quite down. The London, so these are the London highs for Nasdaq. These are the London highs for ES. By the time I was taking that trade, ES was quite low, was a bit low on it, and that made me take the trade. Another reason is because Nasdaq is way above this high. The same high for ES is this high over here. So that is how it was looking. That's why I took it. But I am currently seeing that it was a bad move because we are pretty bullish. We are pretty bullish. We are pretty bullish. I was looking for buys, but I was also looking. I thought price might want to retrace a little bit before going higher, but price was not having it. Price does not want to have it. So I got on, put on a little bit of risk. The first trade on my 50k eval, and we'll see. So it's on a Thursday, first trade of the week also. First trade of the week. The Monday, Tuesday, Wednesday, I have not been getting some good trades. So I thought today was a good one. But I know tomorrow will be a good one. So we'll see and see how price goes. So I was looking for that retracement for price to retrace to that 5 minute. I could also have taken, now if the trade could have played out. My first, my first, not even my first, I could have closed the trade at the beginning of this 5 minute fair value gap. Yeah. So that is where I could have repositioned. Oh shit. So that is where I could have repositioned my position, and that is what I could have taken out. So price might just be right. It needed some a little bit of consolidation before it goes lower. So I'm here to observe and see. So that is where I could have taken the position. So I was wrong on the day. I traded against market buyers, and I got what I decided. Another lesson is in my in my analysis I will be disregarding the 4 hour fair value gap, because this is not the first time the 4 hour fair value gap has fucked me over. So the fair value gaps that maybe I will be looking for some good reaction during entry my entries and my trading time is the daily fair value gap, the 1 hour fair value gap, the 15 minutes, the 5 minute, and the 1 minute. 1 minute is for entry. 5 minute, 5 minute, and 5 minute, 15 minute, 1 hour, and daily is for price to react as a drawn liquidity and break structure to the other side. So, like today, let's go to the 1 hour. Like today, there is this 1 hour fair value gap that you see here that price has reacted to very nicely after sweeping. So let's even mark it. So this is a 1 hour value gap. So if we go down to the 15 minute, price just came market open to the 5 minute. Market open, price came down, swept this low time frame sell side liquidity, and immediately reacted and reversed on it. So that was the cue that price wanted to go higher. In my analysis, I had written that I wanted to take sells. In my analysis, I had analyzed the market and coming into market open, I was looking for sells to sell side liquidity, then buys after sell side liquidity had been swept. Now market open, price swept. So here it is. Going into 9:30 open, I'm looking for reversal sales to sell side liquidity. Price already market open, price came swept low time frame sell side liquidity. Then buys after sell side liquidity had been swept. Buyers invalidation. So 1 hour closure below London lows, that could have been validated the buys. Closure below this London lows, and reversal sales are invalid on London lows being swept. So if this had been swept, then I would not have taken it London sales. But another reason that I see I could have escaped the losses once price had swept this sell side liquidity and broken structure to the upside. Any sales above here, once this high had been broken after this sell side liquidity had been swept, sales immediately became an invalid, and I was only to look for continuation buys or wait for price to come resweep some form of sell side liquidity before it continues high, because that meant that today I traded against my bias and against my daily profile, because my bias is 1 hour bullish structure plus 4 hour bullish closure, buys following trading protocol to the buy side liquidity. That I broke that, my directional bias. Another bias I broke is the daily profile bias, where London opened, manipulated and swept low time frame sells a liquidity. London open around here, manipulated to the downside, swept this low time frame sells a liquidity, and we had a reversal. Now I was looking for New York continuation buys, which it did. Now I was to look for buys. If I was patient, I'm sure I could have found buys. But yeah, it's a lesson to be learned. We'll try again. So this 4 hour disregarded. I've got some lessons, man. Adios.